Asia is in a dividend sweet spot. Why is that?
Well, if you look at Asian equities in 2012, there have been three main concerns on investor minds. One is obviously about what's happening in Europe and the US, and also China's growth slowing down closer to home. Now, when we go into 2013, their concerns remain out of two of these three issues. One is about the US as well as about Europe, but there's more clarity about China. And therefore, we think that at best for investors, it's likely to be a moderately positive backdrop going into 2013 when it comes to equities investments. And sentiment is still likely to be a bit cautious. And therefore, investors are still looking for yield cushion or companies that offer stable dividend growth. Now, Asia does remain in a dividend sweet spot, and the reason for that is when you look at company balance sheets, cash flows are very, very strong and gearing levels are low. And in spite of the fact that Asian dividend stocks have had a decent run in 2012, largely because of a flight to quality, the Asian dividend space remains fairly valued. So we think that there's more scope, more opportunity still available for investors when it comes to picking up stocks that pay very attractive dividends or which are in a potential to increase their payout ratios going ahead.
Which markets in Asia give the highest yields and why?
Well, when we look at the Asian space, obviously it's the developed markets like Australia and Hong Kong which stand out. When it comes to having companies paying high dividend yields, it's also a reflection of the maturity levels of the markets and the companies operating there. So Australian banks, Hong Kong banks, but also some of the ASEAN telecom names or telecom names in Taiwan have emerged as opportunities that pay very good dividends, almost on par or even better than some of their counterparts trading in the developed world.
Uncertainty remains over the US fiscal cliff and the Eurozone debt crisis, but there is more clarity on China. Which sectors do you like best and why?
When we look at China, we think that the market remains very attractively valued. So if you look at Asia as a whole, we think the most attractive market going into 2013 would be the Chinese equity space. Valuations are at multi-year lows. At the same time, we've seen earnings downgrades consistently over 2012, and we think now the worst is over for earnings as well as for top-line growth, and these two have stabilized. And within China, we tend to prefer companies which are a play on the long-term growth trend, the shift from exports to consumption. And companies that stand out are those in the internet space in China, where there is definitely under-penetration of internet services, especially in the e-commerce side. We also like some of the utilities stocks in China, which are looking to pay out higher dividends. And of course, the long-term trend of consumption in China remains. Therefore, China consumer stocks remain some of our top favorites.